reader on the themes set to drive markets this week. Peter McGuire from XM joins us now live via Skype. Peter, welcome to the program this morning. As we said, it was obviously a huge session in the US on Friday. Those tech stocks making gains, but the Dow down significantly. What was your take on those mixed messages that we were seeing?
Well, good morning, Kara. Good morning, Andrew. I think it was a great time to be short, Kara. You know, the US dollar rally, crude got smashed down, and so did equities. So it's going to be interesting how this week plays out. We haven't got a lot of news coming through. I've only got that non-farm payroll on Friday that really is, out there, and certainly our RBA tomorrow. So that's all eyes are on that. And then the next frame, of course, is whether that momentum continues, either downside push or we see a bounce Monday, Tuesday, Wednesday on equities globally.
Yeah, well, what's your feeling? I mean, as you say, there is a bit of data to go on, but what are markets going to be looking at and what's going to drive them this week then, do you think?
Well, I think if you look first off at currencies, Andrew, we've lost 4% in the last, 2 or 3 trading days against that US dollar. So there's been a very, very solid washout as far as Aussie dollar, where and possibly even pushed down from here. So there's the first part. If you're looking at equities, I'm keeping an eye on Japan. I'm conscious as far as the Nikkei 225. Will it stay around that 30,000 level, or are we going to see a big push off there to the downside? So I think traders are a little bit nervous. It's been a very, very solid first 2 months, and let's see where the 1st of March goes.
Why the focus though on Japan?
Because it's third largest market in the world. I'm very conscious it's had a huge move to the upside over the last 12, well, probably 8 months, and it's just been one-way traffic. And I feel as though maybe it's time. It's a little toppy. It's exhausted, and markets sometimes move too quickly, Andrew, and that could be the case very much today.
And of course, a lot of these moves come from the expectation that inflation will be higher than many expected. What are your thoughts on those predictions?
Well, exactly right, Kara. Though, I look at 2 things for inflation. I look at the input costs, how much is crude oil, and crude oil's, we discussed it each week. It's just had the most enormous rally. It was sold off heavily Friday, and copper prices is a good barometer as far as base metals. So I think that maybe it's a time that they're a little bit also exhausted to the upside, and we could see a little bit of a washout there. The Biden administration, what's happening with geopolitics as far as Syria, Saudi Arabia, Yemen, OPEC's a big moving wildebeest that, they've got plenty of oil. So I'm not really looking at surprises unless something comes out of left of field.
Peter, obviously a lot of talk about yield curve control at the moment from the central banks.
Yep.
How are you looking at the RBA's role here? Do you feel as though that they are losing control a little?
Oh, Andrew, it's a big game. It's a global game, and we're conscious as far as that Aussie dollar. What's happening? Where does our central bank play? I feel that they won't move too much. We've got a out of control in a lot of ways real estate sector, certainly across Sydney. I spoke to a very, very connected real estate people yesterday. That run very large agencies. They've never seen anything like it, Andrew, in a period of the last 45 years across Sydney Basin. So, auctions taking 2 weeks to materialise, or 2 days. So I think that our central bank's got to look at that. They've got to look at a number of other aspects, and the unemployment numbers, and where COVID plays. So these are unusual times, Andrew. This isn't a normal arena or a normal set of circumstances.
Yeah, just when you talk about the housing market, obviously extreme heat at the moment, signs that some buyers paying really silly prices, which just is indicative of where we're at the moment. So when you say the RBA will be taking a look at that, what would their likely move be to try and take some of that heat out?
It's got to be probably from a lender's perspective, because you can't control a market. You've got 250,000 expats moving back here. That's the storyline, that are moving back looking for housing. There's no value as far as putting money in the bank, because you don't get a return, and people are looking for somewhere to live as far as shelter, changing locations, moving from cities to countrysides. So I feel as though it's got to be a bank initiative, and maybe there's going to be tighter lending requirements. I can't see them jacking rates up, Andrew, because there's no way in the world is Australia going to be the leader there. So that's the only solution I can see, and maybe that could take a little bit of heat out of the market.
Peter, just quickly before you go, what are you looking at when it comes to Europe? Obviously, the vaccine rollout has been slower than the UK, and that's a good comparison when we look to recovery in economies. What are your thoughts when it comes to the ECB participating in this play?
Well, they're going to, a couple of things on that, Kara. They're looking at where the US dollar trades and naturally the strength of the euro. I think it's going to be, again, the first one that blinks loses, and I don't think the ECB is going to do it. Our RBA is not going to do it. So they've got to look at where the vaccine rollout, how successful it is across the larger economies, being the France under Macron, Germany, and Italy. And then if that can extend and get a solid footprint moving forward, it could be a reasonable second quarter for the Europeans. And let's hope that it's all gone by the mid-year, and they've got to return to some form of tourism dollars for summer.
Peter, thanks so much for joining us this morning. Thanks for your insights.
Thank you, Kara. Thank you, Andrew.